Happy Tuesday, Miami. This is the Miami Condo Exchange, a podcast about data, metrics, trends for what's going on in that large condo trading pit we call coastal South Florida. When I take a look at the South Florida condo market, which is Miami-Dade, Broward, Palm Beach County, when I see east of Interstate 95, I see a trading pit like back in the 80s, the 90s, the early 2000s, before we had the Robin Hoods, the Charles Schwabs that you found on your cell phone, where you could trade stocks. Well, back in the day, you used to have a broker. You would call that broker. The broker would call down to the floor of the trading pit. That person on the floor who answered the phone to write up an order, they'd give it to a runner. Runner would take it to the pit, and everybody would get in that pit, and they started yelling and screaming about whether they were buying or selling. Typically, hands out meant you were selling, hands in meant you were buying. I grew up in and around that. I grew up in Chicago. We had the Chicago Board of Trade. We had the Mercantile Exchange. So I was always sort of around it. When I look at the Tri-County South Florida condo market, I see a massive trading pit that stretches effectively from Coconut Grove all the way up Interstate 95, taking us to West Palm Beach. So on this Tuesday podcast, we always do it 4 o'clock live, although we can run a little bit late. Remember, we are on Miami time. The rule in Miami is if you're less than a half an hour late, no even reason to call. You just assume everybody runs into traffic or whatever it is. So what I'm going to be talking about in this podcast today, as well as every single Tuesday at 4 o'clock on Tuesdays, as mentioned, I'm going to be talking about what's going on with the data. We're going to be talking about what could be actionable information for you, giving you statistics, giving you an idea, giving you trends. So as you go out there and you try to conquer that condo market, you have a very good idea of what's happening. Why should you listen to us? Well, we are traders. We are not sell side. Most of the information you're going to get is coming from the industry. It's coming from sell side people who are all promoting the idea. 1,000 people a day are moving to Florida, and we're the gateway to Latin America. Unfortunately, in the condo game, what happens is you build too much, then you got to unload it. And the only way you can unload it is if you cut the prices. So the idea of the podcast is to give you the information so you know, are we still building? Are we selling off? And you can then take your position about how you're exactly going to play that game. What I'm going to get into with this podcast is we're going to talk about what's going on with our South Florida Condo Cliff Index, the Miami Condo Cliff Index, whatever you want to sort of call it. On January the 1st of this year, we incorporated or created an index in order to track real time what was going on in the marketplace. We're taking a look at active listings. We're taking a look at pending sales. We all know about what's going on with closed sales data. The problem is it doesn't come for 30, 60, 90 days, maybe even 120 days afterwards. So by the time you look at those numbers or that data, it's too old. It doesn't necessarily reflect something. It reflects the past, just like unemployment numbers reflect where we were. We want to try to provide you some sort of tell as to where we're going and where we are every single Tuesday. So every single Tuesday, we're pulling data, and we will be sharing that data with you as part of our index. So you understand on our index, what we're looking at is we're looking at South Florida overall. We will look at South Florida. We will then look at Miami-Dade County. We'll carve it out for Broward County and Palm Beach County. We're then going to tack on 19 other markets or sub-markets, depending on how you want to define it. And we're going to tell you what's going on in those markets. These are the most popular markets in which people are looking for condos. So we would go from Coral Gables. We make an exception for Coral Gables because it tends to be a popular area. We'll then go into Coconut Grove, and we're going to run it all the way up the coast. We're going to hit Greater Downtown Miami. We'll hit Key Biscayne. We're going to tell you about Fisher Island, Miami Beach, Miami's Upper East Side, Aventura, North Miami, North Bay Village, Sunny Hills Beach, Bell Harbor, Bay Harbor, sunny Surfside. We'll talk about Aventura, Hollywood, Hellendale, Fort Lauderdale, Pompano Beach, Boca Raton, Delray Beach, and Boynton Beach, as well as West Palm Beach and Palm Beach Island, where the President of the United States has his Mar-a-Lago. That's going to be in Palm Beach Island, and we're actually tracking it from a condo perspective. We will give you a sense of what's going on right now, and the premise of the index, the way you look at it, is if the market is strengthening, that is great for sellers. If the market is going down, it's great for buyers. Why? Because it's giving you an insight as to whether or not you can hold firm on that pricing and you can wait for another offer, or whether or not you as a buyer, you want to look for a discount. These are the markets you need to be going into. So that's what we'll be talking about. That's what we will be sharing. In addition to that, we're also going to share some data that we collected for a podcast that I do on Mondays with my partner, Jenny Huertas. She's a broker owner of CVR Realty. Every Monday, we do a podcast called Miami Condo Mondays, and we tell you what's going on in the marketplace. She is on the ground, in the trenches. She likes to say, instead of boots on the ground, she likes to say high heels on the ground. And she's given us some insight as to what's going on in the marketplace. We did a podcast yesterday. We were talking about the ultra luxury condos, but we're also talking about the overall condo market. What was interesting about Jenny and her call is about a month ago or so, she actually predicted or said it felt a lot like 2007. If any of you don't remember 2007, don't remember the great South Florida condo boom, and ultimately the bust, which went from 2002 to 2011. She said about a month ago or so, it felt like 2007. So what I did is I pulled all the data coming from the summer buying season. We look at the world in two seasons. You got the summer buying season, and you got the winter buying season. Winter buying season is the time you shop. Summer buying season is when you actually transact the stuff you were looking for during the winter. Give you some idea. Winter goes from November through April. Weather is great. There's all kinds of events, and there's a carnival-like atmosphere. You come down here, you don't know who you're going to run into, whether it's at a bar, it's a restaurant, maybe it's at a art museum. So that's what happens in the winter. And then inevitably in the summer, that's when you actually negotiate your deal. Keep in mind, if you were to take a run at a condo right now in South Florida, chances are it's going to take you 30 to 60 days to close. That's why we break it down into the two seasons. So the first half of the summer, that will tell you everything that was created during the winter. And then the second half of the summer, that gives you an indication of where we're going, the momentum as we start to head into the next winter. So the two of them are sort of symbiotic. They work hand in hand, and it should give you some great perspective. Remember, the condo markets in South Florida are extremely volatile. I like to look at the South Florida condo market almost like the movie Gangs of New York. Have you ever seen that movie? When they were first setting up New York City and you had all these different warlords who were running things. That's effectively what we're going through down here in South Florida, especially in Miami-Dade County when it comes to the condo market. Remember, City of Miami was incorporated in 1896. It is a young city. There's still a lot of available land, developable land that's out there to be built upon. And that's why we look at it this way. Everybody's carving out their turf. It's basically a turf battle. It's a knife fight. If you go back to the Gangs of New York, and that's really what plays out. And we're here tracking it and watching it. I've been watching it since I got here from Chicago. I got here in 1993. At the time, they were killing tourists. They were tracking tourists because there was something that said rental on the bottom of their tag. They'd follow them, they'd rob them, and inevitably some of them ended up dying. That's why if you ever drive on Interstate 95 or even the Turnpike, you'll see 24-hour security. Well, they had to put that in place because crime was so out of control. Fast forward to where we are today. A lot of people want to be here, or at least they did want to be here, especially during the pandemic when we saw this massive run-up in sales as well as pricing. Well, we're coming back down to reality, and that's why Jenny said a month ago, Jenny from CVR Realty, my partner, that's why she said a month ago, it feels like 2007. And if you don't remember 2007, let me take you way back when before we get into our data. So go back 25 years, if you can believe it's 25 years. Go back 25 years, and what happened 25 years ago? Well, we had the dot-com bubble burst. Not going to compare it to AI, not going to compare it to NVIDIA, not going to compare it to any of that, but I'm just saying, 25 years ago, we had the crash occur in the dot-com market. Year or so later, we have September 11th, that tragedy in which everybody died in New York City. They died in Washington, D.C. They also died in Pennsylvania. And because of that, the world changed. And as the world changed, what happened is our Federal Reserve chairman at the time, a gentleman called Alan Greenspan, he came out and cut interest rates. They took them to zero. And what that did is that basically lit the match for new condo development. So by 2002, remember September 11th happened in the practically the fourth quarter of 2001. 2002, you start seeing new construction, and we start humming. We start blowing up with new condos. And as we start to blow up, it builds and it builds and it builds and it builds and it builds. By 2006, we are peaking from a sales perspective. We hit 12,000 condo sales in the summer buying season, which again is going to be from May through October. 2007, what happens? Well, sales fall, but prices rise. Why would sales go down and prices rise? Well, because the sales are the early indicator. The prices they come after the fact. Why would prices still be rising? Because people are still going in. They're still buying, but they're not buying at the same velocity. And what happens? 2008, we bottom out on sales, but prices continue to kind of meander along. By 2010, prices finally bottom. So it took 2 years, or effectively 3 years from the time when we had sales going down, finally we had prices going up. It took 3 years for the sales to kind of bottom out. So in looking at the data where we're at right now in this cycle, and it was prompted by Jenny making the call that it feels like 2007, where nothing is trading, and the ones that are trading at high prices. One of the reasons they're trading at high prices is that value buyers are looking for discounts on good quality stuff. So therefore, it's top heavy and it increases the average. So looking at where we are today, 2021, we peaked. We went off because we were coming out of the pandemic. A vaccine had just been created, if memory serves me correct. State of Florida said, you don't need to wear a mask. A lot of people came into South Florida. Corporations said, listen, you can work from home and do what you're going to do. So many people, whether they were in Silicon Valley, they were in New York, they were in places like Illinois, let's call them high-wage states, as well as high-tax states. Many of them moved down here. They bought condos. They queued up. They wanted to purchase these units. They wanted to take advantage of the fact that they could work from home, and Zoom and technology would now make that permissible. And CEOs were okay. We'll do it. CEOs were searching for employees to sort of fill the gap because remember, a lot of people were getting stimulus money. We had supply chain issues. Everybody had cash, plenty of cash to burn, and employers needed people to work. So what happened? We had an influx of people who came to South Florida, especially Miami-Dade County. They flooded in. They started buying up condos. Our sales, which in 2019, before the pandemic, remember, the pandemic hit about March of 2020. In 2019, our sales were somewhere in the ballpark of 18,000 or so. What happens in 2021? We skyrocket to 28,000 sales. Since then, we've been coming down. What did we do this last summer buying season of 2025? We went from effectively 28,000 down to 12,000. We're down about 57% from that peak of 2021. Where were we back during the great South Florida condo boom and bust of 2002 to 2011? We only fell 27% on the sales side. So our drop in pricing has been significant. It has been awe-inspiring. It has been jaw-dropping. And that's why many people locally are starting to think, okay, maybe it's time to start to revisit it. And if you're a buyer, I would say you should be extremely bullish. Why? Because prices are probably coming down. If you're a seller, you might want to factor in everything that's going on and make a decision. Do I want to hang around or do I not want to hang around? And that's what we're dealing with today. And that's why we created this index. We created the index on January the 1st. We had to coincide in what we call the 2025 Florida Condo Association Financial Cliff. What is a cliff? Well, it's basically all the legislation that went into effect as a result of the Surfside condo collapse back in June of 2021. Nearly 100 people died. There was $1 billion settlement paid out to the families of the victims. But what also happened is the insurance company said, if you want us to insure, we got to know what the hell we're insuring. So the legislature put in place all kinds of requirements, including every 10 years, condo associations or condo buildings have to have a structural integrity reserve study done. So this is a study every 10 years. At year 30, based on the certificate of occupancy, when could people first move in? Year 30, you got to do something called a milestone inspection. And what do both of these mean? They mean a licensed architect or licensed engineer is going to come in. They're going to evaluate the buildings, and then they're also going to give you a lifespan of all the critical elements, and they will also associate a price with it. And the price that's associated with it now needs to be adopted and now needs to start getting funded in terms of reserves. Up until then, people would defer. Associations would defer. Unit owners would defer. Why? Because it would mean it would jack up maintenance fees. And therefore, many people did not want to necessarily deal with it because what could happen? Well, Surfside taught us what could happen, and that's why things are changing. These inspections, they were supposed to be done by the end of last year. Never got them done. Variety of different reasons. One reason, there weren't enough licensed architects and engineers willing to do the jobs. And two, some condo associations said, why should we rush? Everybody else is, they're doing it, and the legislature probably give us a mulligan. Let us do it again. So what happened? They allowed them to do it again. But now all of the requirements are kicking into place. So as we come into 2026, these condo associations are going to have to start putting money in reserves. Why? To ensure that the buildings are safe, to ensure that there's cash to actually pay for it. So condo owners are getting their bills right now for 2026, especially if their budgets begin in January. And sellers are freaking out. They're looking to sell. They're looking to unload. They are standing on the edge of the cliff, and some of them are going over. How much are they going over? Well, I did a podcast. I do a distressed condo podcast on Thursdays at 4 o'clock. It's called Condo Capitalism. I did it with a gentleman I've known for quite some time. He picked off a condo for $30,000 that has a market value, a street value of $200,000. And the family that unloaded it, they were happy to let it go. They didn't want to pay the special assessments. They didn't want to go through the 2 or 3 years it was going to take to fix the stuff. So we are starting to see people unload. We're starting to see people pull the trigger or pull the ripcord, I should say, and get out. And that is creating all types of issues and challenges in this particular marketplace. And remember, when it comes to condos, They're commodities. Just like I told you at the beginning, it's a trading pit and people are, they're buying and they're selling and things like that. Well, if you factor that in, that also means it's also going to translate over into the horizontal living, we would argue. What's horizontal living? Living in a house, living in a low rise of some sort. You say, yeah, but what do the condos on the coast have to do with the horizontal? Well, it has to do with it because a lot of people living horizontally, they're making their money off the vertical. They're making their money off of the coastal product, whether they're doing title, they're selling tile, maybe they're doing interior design. Maybe they're a concierge. Maybe they do property management. Maybe they're a financier. Maybe they do construction. Any and all of that stuff. So the condo market really sort of what drives our local economy. Yeah, we do some trade, but it's mostly transshipment. Stuff comes in, it goes out. There's not a lot of money made there. Some guy's driving a truck. He's bringing a TEU or a container back and forth from the port. Okay, there's some cash there, but I don't know how much there is. We do money in tourism, a lot of money in tourism, although jobs don't pay very well. Where's a lot of the money made? It's made off of real estate, just like it's been for 100 years. Great book you should check out right now. It's called Bubble in the Sun. I cannot tell you how great this book is. It lays out the 1920s Florida land boom. It tells you what went on, and it makes the argument it led to Black Friday, the Great Depression, 1929, which, by the way, another book just came out called 1929, written by Andrew Ross Sorkin over at CNBC. So if you want something to do from now, Thanksgiving week, up until the beginning of 2026, go back to back on these books. You want to start with Bubble in the Sun, and you will follow it up to 1929. And after you read those two books, I want you to call me back or reach out to me and tell me I'm crazy that there aren't a lot of real similar parallels as to what happened 100 years ago. Remember, 100 years ago, you had a pandemic. You had a supply chain issue. You had a pause in the market. Back then, the pause in terms of locally, it had to do with supply chain issues. Right now, we had a pause. What did it have to do with federal government shutdown? There's a lot of similarities. The question is, where do we go from here? And if you listen to Jenny and her spidey sense, because she's been through the booms and the busts, she got here in the 90s as well. She said it feels like 2007. Nothing's trading, but yet pricing is still going up. Why is it going up? Because pricing hasn't caught up yet. It's trailing. And there's a lot of similarities in terms of where we are today and where we were 20 years ago and where we were potentially 100 years ago with the great Florida land boom. So those are two books for you to read. You want Bubble in the Sun. You also want 1929. Go back to back on them. And I think you will have a great sense of where we're at. So all that being said, let's go ahead and get into the data. Before I get into the data, I just want to remind you, you're watching this for free. Because you're watching this for free, that means you tuned in at 4 o'clock-ish. I was running a little bit late today because I was putting together some numbers. But because you're watching it live, you're going to see everything. In the future, if you want to watch it on demand, this particular episode, you're going to have to go to miamicondo.club. That is the club we've set up. It's a community of people interested in the condo market. So whether you're a DIY buyer, you're a buyer working with a realtor, maybe you're a realtor and you got a listing, maybe you're a lender, maybe you're a regulator, maybe you're anybody. We're talking condos, and we're looking at it closer than I would venture to guess anybody in South Florida has done, will do, or is doing right now. It's something that I'm very fond of. I love the condo market. I love the trading aspect. I love the pit aspect. That's why this is called Miami Condo Exchange, because that's effectively what we have here. So we're all condos all the time, and I'm doing these podcasts 4 o'clock every work day. You're going to have me talking about something with somebody, or I'm just going to be talking data, and who my co-host on the data would be. It's going to be a chart. We're going to be sharing stuff with you. But if you don't watch it live and you miss it, kind of like back in the day when you had to watch TV, you had to watch a game, or you had to watch an airing of whatever episode you like. If you missed it, you weren't going to get it for a while. Now you can get it on demand, but you got to be a member of the club. The club is, that community. We bring together people interested in condos. You can find details, miamicondo.club. We typically give you the first 20 minutes of the on-demand version for free. And then after that, you have to get into the club to get behind the paywall. So let's go ahead and we're going to get into our data. Let me pull up a chart and I want to show you. We're going to start off with our South Florida Condo Association financial cliff. We will look at all 3 counties for the overall market, and then we will get into what we call the vintage condos. Remember, I said there's 2 inspections that are required. One is called a structural integrity reserve study. It's done every 10 years. And the other one's called a milestone inspection, done at year 30. You want more details, reach out to your attorney. Your attorney will be able to give you all the details, or simply pull up the law and read it yourself. So let me go ahead and show you what's going on in South Florida overall, as well as Dade, Broward, Palm Beach County. And we put together bar charts or line charts where you're going to be able to see them side by side. Remember, stronger price favors the seller, lower, or not price, but lower, stronger number. Remember, it's an index. Stronger number will favor the seller. Lower number favors the buyer. So depending on which side of the trade you're on, remember, we're in a big trading pit down here. That's how you should venture to go forward. Doesn't mean you can't go into a market that's strong. It's just understand you will not have the same negotiating power as supply builds. You're probably not going to have the same negotiating power as if you were going to a weak market. So we will look at South Florida, again, South Florida, Miami-Dade County, Broward County, Palm Beach County, and also, too, we're going to get into what's going on in some of the key markets. We're going to look at Greater Downtown Miami. We'll look at Miami Beach. We're going to look at Sunny House Beach. We'll look at Hollywood Hallandale Beach. We're going to look at Fort Lauderdale. We'll take you to Boca Raton, as well as West Palm Beach, so you can compare and you can contrast and you can get a good sense, because there's so many condos to look at. Where should I sort of spend my time? Remember, South Florida, 28,250 condo associations. We studied that a year ago. I don't know what the hell the number is now. You had 1.2 million units. South Florida, Miami-Dade, Broward, Palm Beach County, you have 610,000 units with 13,000 associations. So the key is eliminate, eliminate, eliminate. Find markets that make sense, and more importantly, find buildings that make sense. Don't chase after a unit. Chase after a building, figure out the building, and then you make it a very selective, focus type of search, so you know the building makes sense. You're not going to go under contract, get the declaration of condominium and the rules and the FAQ once you're under contract, and then decide you don't want it after you wasted all that time. Find the building, and then from the building, you simply focus on the unit and the pricing. Remember, these are commodities. These things trade. They should trade in a regular market, which is where we're headed. In fact, our market's probably going to be much cheaper. I'm not saying we're going back to the days of the pandemic when oil was negative $30-something a barrel. But we are going to have a price adjustment, because what's happening right now is simply not sustainable based on all kinds of fundamentals. Whether you're looking at the 1% rule, which says your monthly rent represents 1% of the value. For instance, $1,000 a month means the condo's worth $100,000. $10,000 a month rent means it's worth $1 million. We're not looking at that. We're not looking at the cap rates. We came up with some guidelines in terms of your cap rates. How do you sort of figure it out? Not to get complicated. We just said, do something simple. Figure out the rent monthly, multiply it by 12, come up with the annual. Then you figure out your maintenance fee per month, multiply it by 12, and then you figure out your property taxes. Divide it by 12, and boom, you got all these numbers. You put it together, and it should throw off a certain percentage. And what we found in terms of this simplified basic cap rate is that condos in Greater Downtown Miami, the heartbeat right now of South Florida condo market, because of the density, they're throwing off a cap rate of 0.8. Based on our grading or our scale, that's uninvestable. You'd have to get to 4% to be investable. If you really want the kind of deal that makes an investor get excited, we call that a pound the table cap rate, and that's got to be north of 8%. Where are they today? Well, you got the 8 in there, but there's a 0 point in front of it. That's how bad the market is in terms of from an investor perspective. That's why I'm encouraged to think that prices are going to be coming down, because it doesn't make sense to buy one of these things. You're saving money renting. Bankrate, a financial news website, they came out about 6 months ago. They said it's $21,000 a year cheaper to rent than to own. And if that's the case, who are these sellers going to get rid of it to? Well, they're not going to get to rent it to anybody unless they lower the price. Therefore, they're able to get people off the couch to be able to come in. What about on the vintage side? You know, these older condos, these ones that need all these special assessments and the work. We ran those numbers. We looked at Miami Beach. This is a international destination that's well known. You got the Art Deco, you got the party vibe, you got the restaurants, you got Lincoln Road. Well, the cap rate on vintage condos in Miami Beach is 0.7%. It was even worse. So what I'm telling you is, if you go and you buy a condo right now, your return as an investor is less than 1%. What is inflation? And it's going up 3% last reading, just to give you. So you're not doing very well. You alternatively could put your money into a high yielding CD. You could have put your money in the stock market. If you were in NASDAQ or NVIDIA or anything like that, you probably far outpaced what was going on in the condo market. And that's part of my argument as to why I think prices are going down. But I know sales are going down because the data is reflecting it. So let's go ahead. We'll pull up the index. We'll give you a glimpse of kind of where we stand right now. We're going to get through this flyover tour, and then I will get into what is going on with the inventory that's currently on the market. Some of you might be watching this, today, or maybe you're watching it during Thanksgiving holiday, and you try to get a sense, okay, if I go in the game, what's really going on there? I'm hearing about all these superstars who are buying and selling. We're going to cut through all that noise. We're going to take away the FOMO. We'll give you a straight up take as to what's going on. So let me go ahead and share my screen, because you're probably sick of hearing me just jabber on, and you want to look at some numbers. This is supposed to be the Miami Condo Exchange and numbers. Well, let's show you some numbers, and let's show you